Hi, this is John with eGov Access Inc. And this is Form 709, the Gift Tax and Generation Skipping Transfer Tax. This is the official government form which was downloaded from the IRS website. So you can use this form to file your tax return if you want to. Although we've made some changes to it, we've added some yellow navigation buttons. The navigation buttons appear on the screen, but they won't print when you print the paper copy, so you can use this to file your tax return. So for example, if I was to click here, it would take me to my navigation page, and I can click on any one of these buttons to go wherever I want on the form. So for example, I could click here to go to Schedule B, and then back to the navigation page, and then back to page 1 where I was before. The other thing important to point out is that, as you can see up here, I've opened this form with Adobe Acrobat Reader. And that's important because the form actually will not compute unless you open it with the reader. So for example, if I click on this button here, the word amended appears and will print on the top of the form, which is what the IRS wants for an amended return. Now, as you can see, I've already filled out some of the information here for Sam Jones, his address and his social security number. And moving down the form to lines 8 and 9, which don't apply, we'll skip those. But line 10 asks for the number of donees. And we're going to say for this purpose there's one donee, which is Sam's son, Ed. And then on line 11, have you previously filed this form in a previous year? We're going to say no. Has your address changed? We'll say no. And then are you splitting your gifts with your wife? And we're going to say no to that. And so we can skip 13 to 18 and go down to 19, which says, have you applied DSUE? DSUE stands for deceased spouse unused exemption. And we're going to say that Sam doesn't have a spouse, so we're going to say no to that question. Now let's continue by entering the gift that Sam gave to his son Ed. So to do that, we're going to go to the navigation page. Then we want to go to Schedule A Part 1, Gifts Subject Only to Gift Tax. So here we are on Schedule A, and the first question asks if we have a discount. We're going to say no, and then this one doesn't apply because there's no Section 529 election. And so the first gift will be gift number 1, and the IRS wants the name and address, relationship, and description. So we'll enter that information here. It'll be Ed Jones, and the address is going to be the same. And we're going to say that he gave cash to his son. Like that. And the cash that he gave is going to be $5 million. The date is going to be 10/15/2020. And the value is also $5 million. So the net transfer is $5 million, and the total for Part 1 is also $5 million. The next thing we want to do on this tax return is enter the annual exclusion. So to do that, we'll go to Schedule A Part 4 right here, and the annual exclusion goes on line 2. For this year, it's $15,000 for each donee. So the taxable gift is $4,985,000. Now let's take a look at the tax computation, and that is right here, Part 2, right here. The $4,090,000 came over from Schedule A Part 4, which we were just looking at, and the total taxable gifts is also that same amount. Now the tax from the tax table is computed for you here on line 4, and that comes down to the balance on line 6. On line 7, you get a credit, a lifetime credit on line 7. That's right here from the instructions for line 7. You can see the credit is $4,577,800. Goes on line 7. However, non-residents are not eligible for that credit, and they have to enter 0 on line 7. So let's go back to where we were, and there's the $4,577,800. Carries down to line 11, and then it says on line 12 to enter the smaller of 6 or 11. 6 is this, and 11 is that. So line 12 is the $1,939,800, and then the total credits is also that same figure. So that's how that computes for Sam. If Sam had been a non-resident, however, you check this box and you'll see he wouldn't get any credit at all. According to the instructions, he would actually owe that amount of money. So it's a good thing he's not a non-resident. Now let's change things a little bit, and let's see what happens if, in addition to giving $5 million to his son this year, he gave $10 million to his son last year. And let's see how that affects the tax return. So to do that, we'll go to Schedule B, which is gifts from prior periods. And we're going to say in 2019, he gave cash of $10 million. And we need to check the box on line 11A. Let's do that. Okay, 11A. Have you previously filed? We need to change that to yes. There we go. Now let's go back to Schedule B and Internal Revenue Office. Let's say that was Ogden. And this should be 10 million, not 1 million. There we go. Now, this number came from this worksheet. So let's take a look at the worksheet. This worksheet is in the IRS instructions, and we've included it here as part of our software. And you can see it calculates for you automatically. So there's the 2019, and there's the 10 million. And the allowable credit is $3,945,000, which comes to Schedule B in column C right there. And just like that. Now let's go back to the tax computation and see how the change here affects that. So we're going to go back here to page 2, and you can see it's quite a bit different. Line 1 is still the same. That's the amount that we had from Schedule A. But line 2 is now $10 million. That's the $10 million that was donated in 2019. The total gifts then on line 3 is the sum of those two, $14,985,000. And we need to compute the tax on that, on the $14,985,000, which is $5,939,800. And then we compute the tax just on the amount on line 2 on the $10 million, which was given in the prior year, and that comes out to this figure, $3,945,800. Now the balance is the difference between those two numbers. So the tax on the 14 million minus the tax just on the 10 million equals 1,994,000. So that's the total tax that's computed on this tax return. And line 7 is still the same. That's the lifetime credit. But now we've got a number on line 8, which is the credit that we used in the prior year. So the difference between those two numbers is the credit that we've got left over. The total lifetime credit minus what we've previously used equals $632,000. So that's what's available to us this year. And that carries down to line 14. And the difference between 14 and 6, remember 6 is the tax balance that's due now, and line 14 is what we previously used. So our tax is going to be $1,362,000 this year, and that comes down to line 19 right there. Now let's change things around again. Let's suppose that instead of being Sam's son, Ed is his grandson. So that will involve the generations skipping transfer tax. And we'll go to the navigation page, and so we want to do part 2 direct skips right here. So right now on part 1 we've got this information, but we want to move it down here to part 2. So let's go ahead and do that like that. Now we've got all that information in part 2. So the total is the same, 5 million, but this time instead of being subject only to the gift tax, it's going to also be subject to both the gift tax and the generation skipping transfer tax, which is going to make a pretty big difference on this tax return, as you'll see in a minute. Now let's take a look to see how this change affects the tax computation. First we need to change this to grandson, like that. And then we need to go back to the navigation page, and we want to go to Schedule D, Part 2, the GST reconciliation. So here we are, and the lifetime exemption, the maximum allowable is $11,580. But remember, we used 10 million in the prior year in 2019, so let's enter that here. And then the exemption available is 1,580,000, and the exemption claimed is also the same. That's because this has been automatically allocated down here on part 3. So there's the transfer, the 5 million transfer in 2020, and then this 1,580,000 is allocated here to the 5 million, and our ratios come out to these figures here, and our tax is 1,368,000, just like that. So now if we go back to the tax computation, well, let's go to let's go to part 4 here first, and you can see our 1,368,000 comes here on line 10. So now our total gifts, our taxable gifts rather, changes from 4,985 to 6,353, and that is going to go to the tax computation right there on line 1. So that's an increase, and so the total on line 3 is now 16,353,000, and the tax goes to 6,487,000, and the difference here between 4 and 5 is 2,541,000, and then coming down here, this 632 is still the same, but the difference between the gift tax and the applicable credit from 2019. But the balance is now 1,909,200, because the difference between 14 and 6 has increased because of that GST tax, and now we owe on line 19 $3,277,200. So that's how that works, and that's our video. I hope that's given you a pretty good idea of how this form works, and thanks for listening.